All right, trade pros, good morning and welcome to our morning market update for this Monday, May the 4th. 4th of May is here already. I can't believe it. All right, we got a few things to talk about. A little bit will be a preview of a review of what we did last night, Market Analysis Live. We spent a good hour yesterday talking about some analysis on where the markets are, where they could be headed, where the economy is at, and what are the key points to be looking for to really adjust your outlook. All right, so let's talk about something big that happened on Saturday. Warren Buffett, can you guys hear sound on YouTube? Warren Buffett had his conference call. He dialed in via live stream. Okay, so it was really cool to see somebody that's almost 90 years old doing that. And he said, first of all, before what he said, there was a Q1 $50 billion loss, which is a record for Berkshire Hathaway. So even they took a bit of a beating. And he had a wine glass full of Coca-Cola and a Coke bottle beside him. All right, that's Warren Buffett for you. Okay, health is certainly a priority for Mr. Buffett. That's how he's got to 90. If you ask him how he got to 90 years old, he'll tell you Coca-Cola. Okay, he confirmed a few things. Warren Buffett. He said that he sold all four or all of his positions, totaled over $4 billion in the airlines, United, American, Southwest, Delta, which were cumulatively worth north of $4 billion. All right, he said he dumped them all. He said the following. I found this interesting. The world has changed for airlines, he mentioned. It turned out I was wrong. That's what he said. Massive admittance from a legendary investor. You know, we talk about this all the time. What makes a professional trader, a professional investor, a professional gambler, anyone who does anything that involves risk, what makes them a professional is the ability to admit they're wrong while the lessons are cheap, rather than continuing to make a cheap lesson a very expensive one just to feed the ego. All right, you got two choices in this business. Choice number one, feed the ego. Choice number two, feed the wallet. You choose. Everyone gets to make that choice. All right, with that being said, airline stocks are down pretty big. Delta down 9.83% pre-market, United down 10%, American down 9.87%, as retail now chases the tail that Warren Buffett wagged, and they're trying to get out with him as well, just following his move. Okay, he also said, I don't know what 3-4 years from now that people will fly as many passenger miles as they did last year. You got too many planes, so you got out. Interesting approach to this is the ETF called JETS, JETS. It invests in all the airlines in the U.S. All right, it's down 64% to the lows of March from the pandemic start, and it's up 23% now from the March lows, but still down a total of 56%. This thing's battered and abused. Okay, Buffett said another few things that caught my attention. For me personally, he said there was a period right before the Fed acted. Okay, we were starting to get calls. He said at Saturday's meeting, they weren't attractive calls, but we were getting calls. And the companies we were getting calls from after the Fed acted, a number of them were able to get money in the public market, frankly, at terms we wouldn't have given. What Buffett basically said is, look, there were distressed companies that needed money. I was ready to provide it. If you guys remember, Buffett backstopped Goldman Sachs with a crap ton of money, earned a handsome return for it in 2009. Okay, so when you look at it today, it says, look, I was looking to give some money to do some deals, but the Fed provided a bunch of liquidity and didn't give me that opportunity. And what he said right here is the huge one for me. He said, and the companies he said a number of them were able to get money in the public market at terms we wouldn't have given them. Basically, retail investors buying the dip of this market, all right, in conviction that it's going to return on assumptions that, even Warren Buffett wouldn't have given them capital. They said, hey, look, they won, they got money, but I wouldn't have done that deal. And so I think it's an interesting window into Warren Buffett's approach. So under the terms they received the capital, he wouldn't have done it. That's very interesting. The next part is what really got me too. He said the panic in markets changed dramatically when the Fed acted, but who knows what happens next week or next month or next year. The Fed doesn't know. I don't know, and nobody knows. Bam. I've been saying that for decades. Not really decades. Well, almost decades. So it is decades, plural. Nobody knows where this is going to go. Anyone's telling you is just lying to you. I don't know where it's going to go, but I do know when certain things happen, it's going to prompt me to take action. And then finally, this is the last part that he said there's a lot of different scenarios that could play out. And under some scenarios, we'll spend a lot of money. And other scenarios, we won't. AKA, some scenarios we'll get in the market. Under other scenarios, we're not going to invest in the market. So he's waiting for scenarios to play out in real time and make real-time decisions. Exactly what you should be doing. Stop trying to predict this crap. There is no prediction. Even if you did know where it was going to go, I guarantee you wouldn't make money with that knowledge if you introduce the concept of risk management. All right. And so what we're all looking for is these scenarios one piece at a time. All right. Buffett's got $137 billion of cash. Okay. So when you ask, what should I put my money into? Put it into cash. Right now, what you have as cash is king. It's king in this situation until we find out what's going to go on. I think we're going to take a leg down from here, though. All right, earnings season, 806 companies are due this week. Most big ones have already reported. Okay, 55% of the S&P is reported with a 13.7% minus earnings growth, which would be the largest of the quarter in a very long time. All right, Q1 GDP is already negative. Q2 is predicted anywhere from minus 15 to minus 20%. Therefore, the recession has already started. By the time Q2 hits negative, they're going to say the recession has started, but that's going to be in like October, right? The recession is now. It has already started, assuming the second quarter is going to already be a negative GDP. All right, so we're looking at some earnings. There's 806 companies this week. Not all of them are going to matter, but earnings season so far, not that great. Not disastrous, but not that great. But if you think about it, only March has really been an impact for earnings season. All right, in March was the biggest difficulty. That's 1 out of 3 months, and we got a minus 5% print, minus 4.8, let's call it. Multiply that by 3, and there's how people get 15 to 20% estimates. All right. Markets are closed in Japan. Hong Kong's down 4.2. China closed. India's down 5.8%. In Europe at midday, London's down 0.3. Paris is down 4%. Frankfurt down 3.5. Big sell-off. Futures in the U.S. Dow S&P down 1.3. Nasdaq down just 1%. Okay. Crude oil this morning down 8%. To 1823. I'm actually not trading today because I got to set up my platform. I had some difficulties and challenges. So I'm going to let this be guided by our team, Victorio, Markey, and Boxy. They're gems, they're beauties. I'm going to fix my platform today. So I unfortunately can't take advantage of this. However, crude oil is down quite a bit. And co-founder of Mercuria Energy Group, this is Mark Dunnan. He's very interesting of a character when he speaks. Doesn't speak often. It's one of the 5 biggest, largest trading houses in crude oil. And he said this, he says, I believe we've seen the bottom in crude oil. All right. Traders feel the recovery in demand is likely to take more than a year to reach the pre-pandemic level of 100 million barrels a day. Some people say it may never reach those levels. And I think that we have a new normal. I think sentiment was eroded in 5 weeks. In 5 weeks, the U.S. alone, not globally. Globally, if you do that number, it would be astronomical. In 5 weeks alone, the United States has lost as many jobs as it's added in the last decade. Think about that. All right. And so we're going to talk about that in one moment. Hold it. But when sentiment erodes of the consumer, it doesn't return as fast as the stock market has. And that's why I've kind of looked at this rally and questioned it a little bit. I think we're going to test the downside one more time. Whether we put in a new low or not, I don't know. It depends on a lot of factors that I can't talk on the YouTube update. So I got to start wrapping it up. And so watch for that, all right? They say the low is in on crude oil, and I'm not so sure about that. There's still a lack of demand, and there is an oversupply market, so be careful, okay? If you're going to do positions, do them small and add as you're right. Never add to a losing position. Keep paying more for an asset as it goes up. Add to your position at a profit, not to erase a loss. I can't stress that enough. This is investing. You're not buying a bag of chips where it's in your interest to pay as little as possible because tomorrow it's going to be out the other end. You're buying an investment that you hope will yield you a return. So you don't want to look to buy it as cheap as possible. You're looking to buy quality. Sometimes you got to pay more. All right. That's the error a lot of traders make. They try to buy the rock bottom lows, and you never know when the low is in. Okay. If you're buying lows, you know what they say, buy low, sell high. Most people buy high, sell low, or buy low and sell lower. So be careful out there. That's oil. Gold's up 0.8% this morning, hovering around the 1,700. Bitcoin's down 5. We're seeing a slightly increasing auto sales this morning, which was a bit of a surprise. Throughout the day, you're going to see auto manufacturers report sales numbers. Keep an eye out on that. Factory orders at 10 a.m. That's it this morning. The calendar this week is super full. All right. Today, we don't really have much. Tomorrow, we have ISM non-manufacturing out of the U.S. Wednesday, we have ADP non-farm employment change, a precursor to the Friday report. All right. Thursday, we have some data out of the UK. Their central bank is meeting. All right. As well as unemployment claims. Very important. Friday, we have the all-important non-farm payrolls at 8:30 in the morning. That's the kicker of the whole week, and we're going out on it on a Friday. We'll be trading that live with our lead team. An expectation for minus 21 million jobs on this report on Friday. All right. There's going to be sticker shock. there's going to be volatility, and most of all, there's going to be confusion, which means there's going to be opportunity. We'll see you guys there. Have a great rest of your day. Love you all. I hope you're safe. Hope you had a great weekend. Markets are going to be open in about 16 minutes time, and actually 18 minutes time. I'm going to turn over to our team, talk about equities and oil, and we're going to open up a trading room, take advantage, and kick ass. We finished April on a huge positive number. I'm super proud of our traders, and let's do it again. Let's kick off May. Love you guys. Have a great rest of your day. Actually, that was Friday. We started May on a huge number. So I look forward to continuing that momentum. I just was like, wait a minute, Friday was May 1st. You guys take care. Have a great rest of your day. Losing track of time of the pandemic. Be safe, please. And love, joy, and happiness to you and your families. All right, YouTube, take care. Ciao.